Hello and welcome to Business Incorporated, coming to you live from Lagos. I am Bosin Amafaye and we're here from Nigeria's financial capital. On the show today, Nigeria's Zenith Bank announces net profit of nearly 130 billion naira in 2016, proposing a cash dividend of 177 kobo to shareholders. Meantime, Barclays Africa plans to list the gold exchange traded funds in Kenya early 2016. And to the Oscars, the markets really care who the winner is. Let's get started. We'll begin with the markets here on the African continent, and we'll start starting with the Barclays Africa story, preparing to list its new gold exchange traded funds on the Nairobi Securities Exchange after receiving regulatory approval. The fund, which has a primary listing on the Johannesburg Stock Exchange, already has secondary listings in Botswana, Nigeria, Mauritius, Namibia, and Ghana. The Kenyan regulator approved the listing of 400,000 gold bullion debentures, each equivalent to 0.01 of an ounce of gold. The Nairobi All-Share Index closed in the green Friday, up about 0.5%. But at intraday Monday, markets in Nigeria, South Africa, and Egypt were in the red, but Nigeria has since turned green as we speak. The Nigerian Stock Exchange All-Share Index is about 0.30% in the green. The South African market is tapering off that figure of about 0.20%, now flat about 0.01, slightly in the green, trying to make a comeback before closing bell in Johannesburg. In Egypt, the market is trading water significantly, 1.8% now as we speak. The Egyptian market, which was the doyen of the African markets and the best globally last year, more than 70%, is now down 2.39% as we speak. Let's look at the Middle East, where most of the stories surround Saudi Arabia extending a settlement cycle and the plan to launch an initial public offering for its state oil corporation, Saudi Aramco. The markets there largely intraday as little domestic or international news to stimulate activity on the Middle Eastern markets. But for the markets in Qatar, all the other markets are in the red, with the exception of the Qatar there, a little bit gentle, 10,938. I beg your pardon. Meantime, in Europe, investors are eyeing troubles in the London Stock Exchange, Deutsche merger, and a potential new referendum in Scotland. Let's get a bit of sense around where we are as far as the European market is concerned. Olaf Krieger is joining us from Frankfurt Stock Exchange. Olaf, it's good to see you. Okay, so let's start with a business week with Donald Trump. What do we have as far as congressional speech is likely going to be?
Well, it depends on what he's going to say, of course, but everyone here in Frankfurt is really waiting for some more details regarding his tax reform, regarding his spending in infrastructure, just to get the U.S. economy kick-started. And as we all know, Donald Trump is, and that's a matter of fact, the mover and shaker on every single market around the globe. So everyone here is really waiting what he's going to say, what he's going to do to kickstart the U.S. economy, to bring the U.S. economy back on track, of course.
Well, that is on one side, but if you come back to mainland Europe, it's about the London Stock Exchange and the Deutsche Börse and the marriage not likely to happen. What's the latest on this, Olaf?
Well, that's it. This is the final punch, the final blow. One analyst said to me the 29 billion euro merger between Frankfurt and London is off the table. That's what he said, and this is quite annoying for investors and quite embarrassing as well for both companies, for Frankfurt and for London as well. But here's the story behind it, because who in the world will be involved in such a super trading platform between London and Frankfurt if the UK is no longer a member of the European Union? So you can see the Brexit vote is a big concern in this matter. And another thing is that already many international landers moving away from the city of London, and also many thousands of employees moving away from the city of London, finding their way, especially on, for example, here at the Frankfurt, the city of Frankfurt.
Yes, Olaf, that was quite depressing. Waking up this morning to that news on the wires saying the deal, the wedlock is off. But again, as that was going on, the Oscars took place. I'm not sure if you watched the Oscars last night, but the key question is this: do the markets really care about the Oscars? Such a multi-million-dollar annual event.
Absolutely. First of all, I saw some traders here at the Frankfurt stock market, which apparently watch a couple of hours in front of the television watching the Oscar night, because it's always a big thing, and then chaos on the stage, scenes of confusion and embarrassment followed after La La Land crew already on stage suddenly realized the mistake and announced themselves that Moonlight has actually won. And there's, of course, another thing. Hollywood is always, as you already said, a big business. They spend a lot of money to produce, films and movies for cinemas around the globe, and investors always have an eye on that, because that means also if they produce some kind of blockbuster, they earn a lot of money. So it's another big issue here in Frankfurt, and of course a lot of fun.
Yes, a lot of fun. I'm going to spend some time when that shows on London time, Nigeria, time here later today. Tonight, I'm going to spend a few time watching that. Thank you, Olaf. Let's stick together for the rest of the week. It's good to see you there from Frankfurt Stock Exchange. U.S. stocks index futures pointing to a flat, a little bit of a negative open. I'm looking at the Dow Jones Industrial Average futures about flat as we speak, 0.01. The S&P 500 futures about 0.01, just shy of the DJI, and the Nasdaq futures a little bit broader, 0.1%. Okay, looking at 11 straight record close last week, a very great week. That was the index longest winning streak since 1992 for the Dow Jones Index and the S&P 500. In the afternoon today, we're expecting Priceline, Workday, and ZTO to post their earnings, and of course, we expect home sales data later in the day. Asian markets down today with sterling, that's the pound sterling, tumbling nearly 0.5% to the greenback. Analysts point to a report from the Times of London that suggests Prime Minister Theresa May was preparing for the Scottish government to call a second independence referendum to coincide with the triggering of Article 50 in the new month. We're starting in the next 48 hours. Japan's Nikkei 225 was down 176 points. In South Korea, the Kospi was slightly lower, 8.6 basis points. Australia's benchmark ASX 200 finished 14.80 in the red, while the Hong Kong's index down 0.2% in late afternoon trading. In China, the Shanghai Composite was down 24.26 points.